is Raman. Welcome to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. Today we'll take a look at a bearish flag trade setup. A bearish flag trade setup is where price has dropped and now it's consolidating sideways. From here, we're looking for price to drop further. So let's go on to the charts. We'll take a look at what a bearish flag trade setup looks like and how to trade this profitably. We're looking at a bearish engulfing trade setup here. This is EuroCAD 1 hour chart. A bearish engulfing trade setup is when one candle, our bearish candle, completely engulfs the previous candle. So if we were to place this red candle on top of the green candle here, we would not be able to see the green candle. It would be completely hidden. So that's the engulfing trade setup. So this is our bearish engulfing candlestick here. So this is a really simple trade setup and easy to identify. So once we get our bearish engulfing candlestick here, now we're looking to enter the trade short. We're looking for price to drop here. So once we get this, we enter the trade short. Our stop will go on the other side of our resistance here, just in case price tries to break through this level or comes to test this level once again. So we enter the trade short and we stay with the price as price drops here, and we see that price starts to go sideways here. It's not moving any lower, and then we see this big bullish candle close here. So this is a good place for us to exit the trade, because after this bullish engulfing candle, this one could pull higher or reverse directions, because bullish engulfing candle now is in the opposite direction. It's a reversal signal, so we exit the trade. From entry to exit here, we get 56 pips in the From entry to exit here, we get 56 pips in the trade. So just to recap, a bearish engulfing trade setup is where our bearish candle completely engulfs the previous candle. And we are looking for this type of a trade setup at a good support and resistance level. If you look over here, we see that price has reacted at this level several times before. So this is a good support and resistance level. And we see that price then closes lower here. So we have our bearish engulfing candle close. So we enter the trade short because this is a bearish reversal signal. And now we are looking for price to drop. So we enter our trade short, our stop goes on the other side of our resistance level here, and we wait for price to drop. As price goes lower here, we stay in the trade, and then we see that price starts to pull back and we get a bullish close on the candle here. So that's a good place for us to exit the trade. From entry to exit here, we get 56 pips in our trade. So our profit is 56 pips or $560 if trading one standard lot. Thank you for joining me today. I hope you enjoyed this episode. I've prepared a special price action cheat sheet for you. If you would like to grab a copy, click on the link below and I'll send it to you right away. That's it for today. Make sure to like, comment, and subscribe to the channel, and I'll see you next time.